Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. This analysis is compiled weekly from Charles Rotblatt, our senior market analyst for Zacks.com, and he joins me once again to elaborate on what he is looking at on his radar screen this week. On the Rotblatt radar, fertilizer companies. Now, I don't follow fertilizer companies much, but apparently they have been losing their pricing power here of late. How so?
Well, there's fears that they've been losing their pricing power, especially late last week, Friday specifically, September, I want to say 26. A lot of the stocks dropped significantly, and it wasn't just market weakness. There was actual concern about the pricing powers. What seems to actually be the root of all this, on Thursday, September 25th, and excuse me, my dates are off by a number, there was a report in Farm Futures talking about urea prices dropping significantly in the Black Sea. Urea is a key component of fertilizer, and it's one of the things that some industry observers watch to see how that's doing, because a drop in that price could potentially signal weakening demand.
And it's mined in the Black Sea?
It's not. I'm not sure exactly where it's mined at, but it's one of the markets in there. I'm not an expert in agriculture.
Okay.
I just eat the food. I don't grow it.
Right. Right. You're kind of in the same boat.
But that is one of the key ingredients to fertilizer, and that drop actually caused some fears that maybe there's a loss of pricing power. What's complicating matters, however, the other key ingredient, potash, is actually holding up. But when we look at potash, there's a strike at 3 mines in Western Canada, 3 mines actually that Potash of Saskatchewan owns. That strike's been ongoing, and that's been actually helping support fertilizer stocks. And really support potash prices, I should say. That strike affects about 6% of world demand, about 30% of Potash of Saskatchewan's production. So we're seeing potash prices being held up. Now, if that doesn't all make matters complicated enough, we're seeing stockpiles of fertilizer actually being worked down. And I believe Bloomberg News said about 2 weeks ago that supplies are at a 19-year low. So we have 3 different indicators. They're all kind of pointing in different directions. It's really hard to say what's going on.
So the bottom line here in this industry is maybe some of the bloom is off the rose for this industry for a while?
That's a concern right now, but it's interesting.
So to speak, tongue in cheek.
But it's interesting. Before people start thinking there's a stench associated with this industry, no pun intended.
Right.
But before people get worried about it, it's important to realize that really, as we look at third quarter earnings, really nobody's cutting it. When we look at fourth quarter earnings, really no cuts. There's been one reduction in full year forecast on agrarium among the analysts we receive estimates from. But when we look at 2009, we're actually seeing a couple of analysts raise their profit forecast for these fertilizer companies. We're not really seeing actual signs that there's any demand destruction. Now, that said, I think it's important for investors to understand these are very volatile stocks. And as a result, we will continue to see large price fluctuations. I don't see demand destruction happening simply because we are continuing to see government subsidize ethanol. And with oil trading at about $100 a barrel, it still makes sense from a government standpoint to look at ethanol. For various reasons, I'm against ethanol as an alternative fuel, but that's a
different conversation.
Topic for a different day. But we also got to look at the global economy. What's partially been driving fertilizer prices higher themselves is that we have seen worldwide increase in demand. We saw food shortages earlier this year. China, India, and other emerging countries, as they continue to grow, more people are able to afford more than just a subsistence diet. They're actually able to afford full meals, and that's driving up food prices worldwide. So we're not really seeing signs that these fertilizer stocks are going to lose pricing power. And in fact, on the flip side, depending on how the outcome to the strike in Western Canada is resolved, it could actually create additional worker strikes and additional work stoppages at other mines in Canada and possibly elsewhere, which could lead to more supply disruptions next year. So there is uncertainty. Clearly, if someone's a risk-adverse investor, these fertilizer stocks are not for you. However, when we look at a fundamental basis and see what's going on, we're really not seeing any signs that these companies should earn less next year than is previously forecast.
What capitalization do these companies have a tendency to be in?
They vary because obviously stocks are so volatile, but we're really looking at about mid-cap companies mostly. These are not, they've been actually increasing in size because of the rise in prices, but obviously with the significant drop, we have seen it. But I'd probably categorize most of them around the mid-cap level.
Okay, and do you have any indication at this point, of course it's still too new, but the law that takes effect today here in the United States, today being October the 1st, where now retail stores have to put labels on food that comes into this, that they're selling that's come into this country from other countries. Do you see that putting any additional pricing pressures as maybe consumers become a little turned off at some of the food that they're forced to buy from other countries?
I don't think so, and that's really difficult to say because we really don't know how consumers are going to react. When we look at other labeling, however, consumers really,